This week, I'll jump into one of my favorite chart patterns, which is called a parabolic curve. The parabolic curve, when it comes to small caps, penny stocks, etc., is more popular, but when it comes to the type of setups I like to trade, swing trades, focus on mid to large caps, it's actually rare. I'll show you a stock that I've been stocking for over the past 2 weeks, and I couldn't wait for this particular setup. I'll also dive into our official swing trades for the week. Welcome back, everyone, to Finesse Fridays. This is where I'll recap our swing trade setups for the week. Not only that, but the discipline and the mindset behind them all. Parabolic curve, the chart in which we found it on. CAR stands for Avis Budget Group. Check out that chart. Wow. I personally love a parabolic curve. I haven't found one of those in some years now, mainly because it's not something you'll find really on mid to large cap stocks. Personally, for me, back in my penny stock, small cap trading days, they were more easily found because of the price range in which I focused on. However, CAR stalked that for about 2 weeks, and I understood based off of the formation, the dynamic, the curve, I knew the end result. It was just a matter of being in position to benefit from the drop. So I'll go through that chart. I'll discuss it. I'll also discuss QCOM, and how we capitalize off of that. And let's get into these charts. This was our official swing trade for the week. QCOM has been on Finesse Friday before. We featured it probably twice. You'll find that we recycle the same tickers over and over. We understand market structure and market dynamics, and we don't deviate from what's worked over and over again. In particular, for this week, Comcast had a great setup. There was a particular level I was watching for. And with this trend, you'll notice that yesterday's pullback did break the trend. However, yesterday's pullback also pulled back into a 132 support level. If I put my cursor like this, you'll be able to visually see and identify this level in which I speak of. Besides uptrends and downtrends, we also focus a lot on levels and key zones in particular. You can always download my framework for Finesse Fridays in terms of the swing trading methodology, absolutely free to you. The link will also be inside the description. The pullback into this particular level allowed any opportunity to add to, let's say you had shares, or add to your call options. And today, I must admit, it was a surprise gap. Earnings is not until next week. This was not an earnings play at all. Generally, I like to avoid entering any swing position around, let's say, the week of earnings. That's something I would not do. I don't want any factors to disturb the technicals outcome of a chart setup in which I may foresee. In particular, QCOM, this huge gap today where price did open up at 145.61 and it went all the way up to 151.50. This week's expiration in particular, because of the movement, because you don't have to worry about the time decay, which is the theta, the acceleration in terms of the return was well over 1,000%. Let's say someone may have had next week's expiration date or even further out. The returns were between 300% to about 500%. We have members in our community that capitalize on QCOM's movement where they were able to sell their contracts for well over 300%. QCOM setup, golden key, and we were able to finesse the markets based off of this. Bonus provided was 5. 5 was very short lived. It was literally maybe a 1 or 2 day hold in terms of the execution price. I provided a bull level around 238, breakout to new all-time high. Shares moved over $10, $10 to $12 range. And the thing with new all-time highs, you cannot be greedy. The options returned over 100% based off of this one candle and opening up the next day higher before it eventually fade. I preach over and over about no greed, no need to be greedy, because we're able to find these quick setups to be able to position ourselves, understand what we're doing, and exit according to our trading plan ultimately. 5 was the bonus, was able to capitalize great returns on this one as well. Now, throughout the week, especially last week and the week before, CAR came on my radar only because it's a part of my list when it comes to swing trades. It's one of the stocks I've provided well in the past before. We made great money, and just a matter of stocking it. And for some reason, I missed the basing of it all. So we did not capture the upside momentum, but I was stalking it mainly because I identified this chart pattern in particular, parabolic curve. It is very crucial. I absolutely love the outcome, especially knowing if you can't find shares to short, there's always option contracts, puts in particular, that you have access to in order to capitalize on its inevitable fate. Car Avis Budget Group, this is a typical parabolic curve. Well before this movement higher, I'll just extend the chart so we can more so focus on the basing that occurred prior to this up movement. I'll zoom out so we can see more candles, more data, and then you'll be able to visually see exactly what I'm speaking in regards to. If I were to add levels, you'll be able to see key levels in which price did hold, where the basing occurred, etc., before the rip to the upside. I do not believe in chasing momentum, especially if you don't have a particular entry price. For me, my entry is everything. If I do not have my entry, I typically do not have a trade. I will not chase this, regardless if it continue to move higher and higher and higher. I'm okay sitting back, waiting, and observing. In the case of CAR, the movement just continued. We can see like day after day, week after week, particularly let's go to a weekly chart. We have about 1, 2, 3, 4 weeks to the upside. When this came on my radar, price was, let's say, around this area, around the 230s, give or take. And I know what you're thinking. Latoya, you had time to get in. But remember what I just stated. If I don't have my entry, it's not a trade for me. And it's not something I'm willing to provide to our community because I understand the risk at the end of the day. Who wants to be a bag holder? There's too many opportunities out there to put your eggs into a basket based off of uncertainty. When it comes to trading or our swing trades, even day trades, we have to have a concrete plan. What is the exit strategy? What is the target, etc. Wednesday card made an ultimate high of $847.70. When it peaked and the bar came into the other candle, simply grabbing some puts and also throwing in the community, today is the day CAR is going down. It's parabolic. It's not going to maintain this acceleration, the price, etc. And really, that was the basis in terms of explaining what a parabolic curve is to our community. But not only that, is also a part of our modules in the back end of our mentorship program. Options at the time in particular, if you look at the 500 puts, that's the strike. If you look at the 300s or the 350s, what I was looking at, although technically those were out of the money, you have to understand what was the risk. I always go by what am I willing to risk in something like this before I enter the trade. So calculating the risk, basically what I'm putting into the option contracts. Also, what is the expiration date? Based off of my history of understanding parabolic curves, this thing was going to either take this week to come into fruition or the most next week. So I did short dated expiration dates, and the downside momentum huge. If I give you a glance into the pricing of the options at the time of this day, the 300 or the 350 put options, those were priced between 200 to maybe 400 bucks a contract before the momentum really kicked in and price started moving in the favor of the puts, meaning dropping, as we can see the chart. Those contracts right now are currently priced at $9,000 for one contract. So versus the 2 to 400 it would have cost, now they're priced at 9,000. That's giving you an insight into this huge parabolic move of its inevitable outcome. For this week, just like each and every week, having a trading plan is imperative. Entry points, your stop loss, that's your risk management, and understanding your take profits based off of the areas in which you've analyzed on the chart. Simply by being in a position or being in position in general, set us up for the opportunities. If you are struggling with the swing trading process, if you're struggling with trading in general, even if you're a beginner, we have a great framework you can simply download, absolutely no cost at all. Also, we are having a 4-week intensive. This is a great process. I can't stress that enough, and you'll be very happy with the price. That link for our upcoming intensive will also be inside of the description. Once again, the question remains, did we finesse the markets or did the markets finesse us? Well, we finessed the markets this week. Inside of the comments, please let me know if you finessed the markets or did you have a little trouble and the markets finesse you? I'm pretty sure we can get you on track and help you out with that. Until next Friday, everyone, enjoy your weekend.